Hi, I'm Mike Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader, and I'm here with your Cabot Weekly Review, and I am recording this late Friday morning as usual on here September 9th. It's been a pretty good week for the market. I think the major indexes as I record this are up, say, 3%-ish on the week. And more than that, we're just seeing a lot of stocks that some did break, don't get me wrong, the last couple of weeks during the correction, but they did a lot of others pulled back normally, held some support, even things that really aren't in my wheelhouse, but kind of off the bottom names, held their 50-day line, starting to bounce. So it's been a constructive week. That said, I can't say anything's really changed. If you want to argue that the intermediate term trend is, neutral and not negative at this point, that's fine, but it's not positive. And kind of more important to me at this stage is all the indexes are below their 200-day lines. The long-term trend is down. And I think 70 to 75% of the New York and NASDAQ or also stocks on those exchanges are below their 200-day line. So we're still obviously in the bearish environment, but I still lean toward this being sort of an in-between area. We'll see how it plays out. Maybe we keel over on inflation reports in the Fed, who knows? But there just seem to be a lot of stocks and sectors that, are looking like they may have hit their lows for the cycle. And ideally the last 3 or 4 weeks, the sharp correction, this bounce and all that is sort of letting some of these stocks and sectors and all this put in sort of tighter, more constructive launching pads as opposed to the wild up, down action of the past few months. So we'll see how it goes. But overall, I still think it's time for caution, but to keep your eyes open, all right? In Cabot Growth Investors model portfolio, we haven't done anything. We have 4 positions. They're all acting well enough, although they're still subject to the, the rotation in the market. We're still seeing selling on strength. Things pop higher for a week, and they pull back for 2 or 3 weeks. So there's not really much progress being made, but they're all hanging in there pretty well. But we're still about 65% in cash, which is obviously some cushion in case things go down. But the way we look at it too is some dry powder in case the market does kick into gear. Let's just see how it goes. I would also mention and I don't know if this is infecting everyone else, but there seems to be a confluence of whether it's put call ratios, money flows, surveys, futures positioning, stuff like that on the sentiment front, that it just seems like we're seeing almost uniform pessimism out there. Doesn't mean the market has to go up. Who knows how it plays out? But I think it's just important to just stay flexible, keep your eyes open. A lot of these stocks are coming down. They've been trying to build bottoms here for a few months. If things go well, we'll see. But if things go well, I do think there can be a lot of names to sink our teeth into a few weeks from now if the market kicks into gear. But for now, I think it's best to remain cautious, stay close to shore, so to speak, and just keep your watch list up to date of potential future leaders, okay? Let's hop into the charts as usual. I'm using a program called MarketSmith. You can learn more at marketsmith.com. It's a product of Investors Business Daily. Get my pen out here. So with the major indexes, here's the NASDAQ. Again, you're trying to sort of see maybe a potential bottom forming. We'll see how it goes. Still below the longer term moving averages. This week we have, holiday shortened week, of course. This morning we're bouncing back into the 50-day line. Honestly, obviously up is good, don't get me wrong. And that's really the game plan going forward, is if we can really get ahead of steam here, and more importantly, get some individual stocks to really show some power and break out and not just go up for, 4 days, test a new high and then pull back for a week or two. That would be certainly a character change. So up is good, but at this point, we need to see a lot more than just, sneaking above the 50-day line. Like I said, if you want to say that the intermediate term trend at this point is basically sideways, I'll grant you that. That's fine. You can call it neutral, which is an improvement, obviously, over what we saw heading into May and June. But either way, I'm not buying into neutral markets. I'm trying to buy into bull markets where it's not easy, but easier to make money, and you can make big money. That environment's not here yet. Other indexes, some are better, some are worse. The S&P 500, you can see a little bit above the 50-day line, but generally speaking, same sort of pattern here. You had your May, June, then you had your rally toward the 200-day line and your sharp pullback. If we can hold this area, obviously, the longer we hold that and the longer a lot of individual stocks hold their support area, I'll get into names in a second, the better. But, so far, so good. It's just been a few days, but so far, so good. Just running through, Russell 2000. Again, this was a very sharp correction, so some bounce was going to happen. I think the NASDAQ fell 13% in 3 weeks or whatever it was, pre and post Fed, Jackson Hole. So nice bounce back above the 50-day line. But again, I wouldn't say it's really anything meaningful at this point. MDY, same sort of thing. This is mid caps. And then, of course, the New York Composite. All right. So really not much. You could, if you're a chart person, I saw this, I got one question on it. Some people are looking for sort of an inverse head and shoulders as a chart pattern. I'm not a big chart pattern guy with major indexes. It's just too obvious. Everyone's watching them. It's just more about the trend. Right now, if you want to say the intermediate term trend is neutral, that's fine. But, we're going to have to attack, the 200-day line at some point and get some stocks hitting new highs to really, break out of it. I do think there's potential to do that, but we have to wait to see it. The last thing I would say, just on sort of the index front here, the 200-day line on the indexes are all basically around the August high. What does that mean? It means nothing, to be honest with you. But I like to look through, try to play out scenarios that could happen. This is not a prediction at all. But you just want to play out these, one trader used to say, you don't know what the market's going to do, but you can be prepared for whatever it does do. So just kind of play through some scenarios up, down, or sideways. If down the road, say the NASDAQ did something this and then kind of got going, taking out this high would also take out the 200-day line, which could be your sign that the longer-term trend is reversing. And that's often what you see is, the 200-day line kind of does this. It kind of levels out a little bit. And then kind of at that point is when the market kicks into gear. Not always, but I'm talking about some of these bottoming processes play out like that. But for the here and now, like I said, it's this week is good. It's a step in the right direction. It's good to see. Up is good. And individual stocks look, I think, better than the indexes. I still think that's true, but there's still more work to be done, okay? The only two things I just want to mention on the sector front here is there's no rush into defensive stocks. This is XLP. I know the dollar is in the news now. The dollar has been very strong, which can hurt these international firms, whatever. But either way, I think they would be piling into some of these stocks if they wanted to, play some defense. So that's a positive. I would just say in general, a lot of the market is in gear right now, which is, you don't want it all in gear on the downside, but usually in gear is a little bit better than out of gear. And I would just say there's not some rush into defensive stocks. The other thing I'm kind of keeping an eye on, maybe it's not going to mean as much this time around, but I mentioned last week the chip group. You can get rallies without the chips participating, but it's usually better if they are. And they have been weaker than the NASDAQ and stuff lately. I guess the RP line's a little bit above there, but it's been a little bit weaker than the major indexes. So it would be nice to see this thing get above there and kind of hold going forward. So far, you can see it's really not that far from new bear lows. Okay, so those are just two things I'll be watching. I wanted to run through some names. These aren't all, again, I mentioned earlier, a lot of these aren't things I'm really even watching to buy at all. They're really not on my watch list at all, but even distant watch list. But just running through a lot of charts over the weekend and during the week, you just see a lot of normal activity. Okay, so I mentioned last week, like Neurocrene Biosciences is NBIX. It's not, the biggest, you can see on the weekly chart, it's not the most dynamic name. But again, you're just kind of getting this, you call this, cup with handle if you want to. You have your breakout. And then as the NASDAQ pulls back sharply, it just kind of pulls back grudgingly, holds the 50-day line, pulls back, starts to rally. Could it break down next week? Yes. I'm just saying so far you see stuff like that. ALNY, LAM, ALNY, this one's a little bit more speculative, but it had a big gap here on trial results. And again, this isn't a nothing correction. This is 235 to 200. It's not like it didn't go down, but it kind of, you look at the chart, it's like it didn't really do anything wrong, obviously above the moving averages, above this gap. And now it reported some good news yesterday on Thursday. You can see it rallied on strong volume. Netflix, this is one I'm definitely not interested in, but just an old leader, doesn't have the growth anymore. You can see the stock got destroyed, but kind of bottomed out here, had a rally. And again, just on the pullback, it's actually easier to see on this weekly chart. Just a pullback here to the 10-week line on the weekly chart. Looks normal so far, no volume selling. Doesn't mean it can't collapse next week or whatever, but so far you're seeing stuff like that. Starbucks, again, this is not my cup of tea, but you kind of had this decline. Look at the daily chart on Starbucks. This decline, a little bit of a bottoming action. You have the rally, and then again, just this pullback here over the last couple of weeks while the NASDAQ, the Starbucks is not a NASDAQ, it's not a tech stock. But either way, you have this pullback in here to the 50-day line and then meets, not just bounces, but, pretty good volume in here. Gas prices might be playing a positive role for some of these retailers. So there's always some reason for it. But even so, so far positive action. Not saying it's a buy here, but it just looks okay. Wingstop, this one is something I'm watching on my watch list with, kind of a big top, crashed. It hit 4-year lows, or it went back to where it first hit 4 years ago. Not that much of a bottoming process, and then it's really just shown abnormal strength here. Again, you can always find a reason. Some people are saying chicken wing prices are down, so I don't track that on a day-to-day basis. But nice rally. Again, not a nothing pullback. It pulled back 30 points, 140 to 110, but it hit the 50-day line, and then you can just see the volume accumulation actually hitting a new recovery high this week. So that's Wingstop. That is one I am keeping an eye on. On semiconductor, it moves around a lot, but again, you have this, thrust higher and this pullback. You can actually see it better on the weekly chart. What is this? 1, 2, 3. I think this is 7 weeks up in a row here. Tags new all-time highs just by a little bit. It's not ripping to the heavens here. But then you have 3 weeks, 2 weeks down, not much volume on the bounce this week either. Of course, it's a short week, but hits a 10-week line and finds some support. Hyatt. Okay, this is, I'm just trying to show you some stuff out there that's not the end of the world. The Fed is going to kill everything. They might, but so far some of these things seem to be saying, well, they're not going to hurt my business per se. Hyatt, obviously, huge chain. It's been in top 10 a couple times, but not a great, growth name. Obviously, more of a turnaround with the new travel boom, so to speak. But again, you have this persistent rally into resistance in here, no doubt. But just kind of chopped lower in here, 97 to 86. And now it's starting to rally. You got a little volume here the last couple of days. We'll see how it goes, but looks like a normal pullback. Global Foundries, this is one that, we took a shot at when it tried to break out in the spring. The market wasn't ready. It failed. But this is sort of a big, don't get me wrong, this is pretty deep. This is about 50% correction. But it certainly looks like it's changed character here. And it looks, honestly, kind of like it's ready to go. Again, you have this sort of 3 weeks down here, no volume on the pullback. And now it's bouncing off, I don't even know, I guess it's 200-day. But either way, this is kind of a proper shelf. It's not doing this anymore. It did this and just kind of is chilling out, which is sort of classic action. So GFS, that is one in the chip. There are a few chip stocks that look good, like onsemi and Global Foundries, but looks pretty good. Array Technologies, this is one of these. I wrote up a few, not secondary plays, but sort of secondary plays in the solar industry, kind of down the food chain names that feed on the overall industry's growth. These guys make trackers that move the utility stuff around, so it's always facing the sun, so to speak. But you can just see on the weekly chart, big rally here. Obviously, it's a lower price name. It went from 6 at the low to 23, the bear market low. But again, you just have this nice tight consolidation in here. It's very volatile. Maybe it keels over, but so far so good. How about Amazon? You ever heard of this company? They sell some stuff online. Again, you had this little bottoming action, and what I would just want to point out is this normal, hits the 200-day line, but then it's kind of a normal pullback to the 50-day line, so far holding. We'll see what happens, but so far so good. Pure Storage, PSTG. Not to throw too many names at you, but just to show you that there's a lot of stocks in here. Not all that I would buy fundamentally. This looks like a huge support week on earnings. It got hit, but kind of closed mid-range. This is kind of you could call it a cup with handle or whatever, but it's just kind of a basing pattern. And my point is this last 2 or 3 weeks has been normal. I'll just run through. Ford, big rally off the lows, consolidation. Will Scott, this is sort of a, oops, sorry about that. It's the wrong, WSC, Will Scott. Grudging pullback straight up, 3 weeks down, no volume, coming back. And then a couple others. This is sort of on my distant watch list. This is TOST, which is sort of a payment player. Got killed, recent IPO, but just starting. It's not really, doesn't have enough momentum for me, not enough of an uptrend, but trying to bottom out here. Again, this pullback the last 3 weeks, nothing. And as soon as the pressure comes off the market, the stock is popping this week. This is TOST, okay? And then even with, on the energy front, you have, natural gas is still high, but I think it's, went from 9 to 7 or something like that. Oil prices earlier this week hit multi-month lows, but here's, EQT is a natural gas play. Again, I'm not going to sit here and say this is the best, tightest basing structure ever, but again, this pullback during the last couple of weeks right here looks totally normal. Chesapeake Energy, CHK, this is actually popping toward its old high today. But again, it's sloppy on a day-to-day basis. But overall, I guess what I'm trying to say is this sort of consolidation in here looks normal, A, given the market, and B, given energy prices. Devon Energy, DVN, we'll see how it goes. Maybe this slides. This just went ex-dividend today, so this chart's a little bit off, but we'll see what happens. So far, the point is you run up from 53 to 75 or whatever it is, pull back so far pretty normal. And then even like Cord Energy, I think I mentioned this a week or two ago, CHRD, this is kind of a newer name because it's a merger of equals that went through, straight down, straight back up, which isn't ideal. But again, this pullback looks pretty normal. So that's not to say I can't go out there and pull up, I don't even know, like Braze or whatever. A lot of these stocks, this is a recent IPO that I liked. It was a little thinner, but, again, went from 51 down to, 35 or whatever. So a little bit too much of a correction, still below the 50-day line. There's plenty of stocks that got hit, don't get me wrong. But my point is there are a lot of stocks out there that are trying to build some structures. Some of these are on my watch list, some of them aren't. But even like a Netflix or an Amazon that are trying to build sort of normal, lower level launching pads that the longer they can hold up, the better for the overall market. So just back to the indexes, still time for caution in my opinion. You can't, if you're a trend follower, you can't look at this and just say, oh, it's a new bull market. You're not going to say that if you're looking at the chart and the trend at all. Still below the 200-day line, still work to do. And who knows, maybe we close down on the day and keep getting hit. So I think you need to have a lot of cash out there. But I do think if you have a lot of cash, if you're not really bleeding out this year in your portfolio, I do think there's some names in there that you could nibble on, not on strength, preferably on weakness or some tightness. Strength is still being sold into for the most part. That you could nibble at, take a little shot at, keep a tight stop in there. And then if things work, you can add to them. More importantly, I think, is just keep your eyes on the prize. Ideally, we're in sort of this multi-month bottoming process. When we get going, whether it's next week or in 2 months, or we shake out to a new low and then get going, whatever the case may be, there's going to be a ton of opportunities out there. I think there's a lot of stocks that have already hit their lows. They're already kind of setting up their play for the next advance. So keep your eyes open. I know it's a lot of bad news out there. Keep your eyes open, stay cautious, but keep your eyes open looking for those potential leaders. Okay, that's all the time I have for today. Thanks for watching. And as always, come by again next week for another Cabot Weekly Review.